Hello and good afternoon, feeders. Today is November 3rd, 2021, and my name is DJ. Joining me today, as always, we have Feeder Finance Patrick. Pat, if you'd like to say hello to everybody at home.
Hi, guys.
Hey. So, we got a lot of good news for you this week. Starting as usual, I'll briefly go through the TLDR, and then Pat and I will get into some discussion. So, starting with the TLDR, we have released a new roadmap. If you haven't seen it, please be sure to check it out. There's a lot of good info in there about where we're heading in the next couple months. The FTM launch is finally happening on Friday. Big news, big news. 8 new AutoStaking vaults targeted ACS with Atlantis Loans as endpoints. Be sure to check those out as well. They're having some juicy APY. BSW AutoFarming products coming shortly after the FTM launch, with Planet Finance and SpiritSwap coming right behind them. Ooh, very juicy opportunities there. Platform efficiency to improve with new enterprise-grade nodes being set up, so hopefully we'll have less portfolio loading issues, mainly a node issue. Social scoring development reaches the final stages as profile structures and mechanics are being developed, so soon you guys will see social scores being added to your portfolios. And the portfolio upgrade working in tandem as new APIs are developed for new product launches. Big shout out to Raphael for the hard work there. So, getting into the meat and potatoes of our update, we've released a new roadmap, Pat. You want to briefly touch on this? It looks like you've shown where we've come from versus where we're going.
Yeah, sure. Very excited about our roadmap, and a lot of things are coming in short order. First, with the Phantom launch on Friday, and I this time we've tried to make the infographics a bit more clear because we realize that the project has branched out its branches into many different things.
Mm-hmm.
And we're also launching a new branch, which is the lending branch. So this infographic is trying to convey that a lot of things are working in parallel. So what we'll do, in maybe you can just quickly run down in terms of our timelines. So basically in November, the main highlight obviously is Phantom launch,
Yep.
which we'll do in 2 days. But also what we'll be doing there is our social scoring, which I'll touch on in a bit as well.
Mm-hmm.
And then what we'll do is there's a lot of requests for innovation products. We're still trying to look into that, but first and foremost, we want to get some of the requests that were requested done, and I'll talk about that as well. So a lot of things are already moving forward in this roadmap.
Mm-hmm.
And then there's the portfolio upgrade, which we're also working on. So that's in November. We have Phantom, we have portfolio upgrade, social scoring, and we have the innovation products and new sort of vaults coming out in November. And then in December, what we'll be launching is something totally new. This lending product is something that is going to allow a lot of people to really be able to unlock their liquidity for tokens that they own.
Mm-hmm.
What we're hoping to do is that we'd allow any token to be collateralized and lent. Whether or not we launch with the ability to do all of that at once will be seen. But we have already booked Peg Shield for that for the end of the month. So we have a month to develop, and then let's see how long it takes. So we're already working on that, even though we say we will launch that in December, but we're already working on it.
Mm-hmm.
So that's going to be cool. The cool thing about that also is actually that at the moment, in DeFi, you can borrow or lend, and that's pretty much it. You have some synthetics out there that is sort of allowing people to trade bond-like products, but what we're excited about is that the fact that we can borrow or lend any token means that um, there is an infinite combination of loans that are created, and what will allow is for them to be bought and sold as well. The exciting thing, especially for me, being in finance, is that um, the secondary bond market is is really exciting. Let's say you lend your money at 30%, and you think you had a really good deal. You lent it for an APY that's much more than what the market is usually demanded for this particular pair or collateral.
Mm-hmm.
You could turn around and right away sell it for 25% or 20% if that's where the market is, and pocket your profits right away without having to wait for your loan to be to end.
Right.
So that's something I'm super excited about, and we'll try to do that with our lending product. So that's that. With the lending product, there will come some tokenomics change, one of which we'll talk about today as well. And then in September, we'll also, I think this is something that especially some of our members are very vocal about, getting the swapping, the exchange some more light. So we'll upgrade that in December to become its own sort of, this trading page where you have charts, and then you can swap right on the platform. So, ignore KuCoin, you'll just be on Fleeter Finance and, you know, doing your trading here, doing your DeFi here, vaulting, farming, AutoStaking, all that is on the platform. So this is going to be pretty cool. And then, having launched now close to 100 now, and with FTM launch, we'll have at least 30 just for the launch.
Oh, wow.
We'll be, over 100 vaults, and it'll be with BSWap and with Planet Finance and with all the other ones that we'll be launching by December. We'll probably have something closer to 200, we hope.
Mm-hmm.
And with all of that, we have a lot of data, and we think it's probably time for us to utilize that data and show that data in isolation, so that you have this market overview data page where you can see all these different tokens, how much the APYs are, perhaps the charts of historical APYs to see, and where typical rates are for this particular token.
Mm-hmm.
And that would also inform the lending product itself, where potentially where the rate should be, and stuff like that. So it's all sort of, all these pieces are they're meant to come together. It's just that we need to build things, piece by piece, and then but it all sort of combines itself and creates value for one another, when they're put together into a platform like ours. So it's quite exciting. And to end the roadmap, we've also discussed what we think our sort of Q1 goals will be. And we think it's time to start to transform the platform by that point into the wealth management platform we've always envisioned.
Mm-hmm.
So what an exciting part of that is, a lot of our users and members are talking about managing money for other people,
Mm-hmm.
especially, managing crypto money for other people, friends and family and stuff like that.
Oh, yeah.
And it's really difficult to manage a couple of wallets, and even, try to, when you manage money for other people, you need to tell them how you're doing. And, doing that for a couple of wallets and stuff like that, it's just a lot of headache. And we think we have a solution for that, whereby you have one wallet, but you have a lot of sub accounts basically under that wallet, and the performance and the history is all tracked separately by accounts. So that's going to be pretty easy. And then what we can then build on top of that is that um, you can either have it as closed accounts or open accounts, right? And if you're doing things well, um, you could basically manage this account as an open-ended fund, where your performance is public and other people can deposit money, and that you manage that money and pay your fees. So you can essentially build your own sort of crypto wealth management business around this whole platform, using our products to manage that money, whether, or, just keep it private and manage for your family, or out into different strategies, for instance. So it's allowing a lot of things to be done for a lot of purposes. So it's going to be pretty cool. And as as well that partnership with ACSI and crypto will allow us to introduce the index and ETF options. We also think about Penn Finance, for instance, with their YieldX product, which is also somewhat like an ETF of farms, which, initially when we launched the project, we actually wanted to do that.
Hmm.
But now that someone else has, we might as well, aggregate, because it saves us months of development and probably, at least or close to 100,000 in audit fees for that product.
Right.
So that's pretty good. That's the value of this platform, where we can include anything out there and just provide it and make sure that it fits and flows well within the platform. So that's I try to make that as brief as possible. It's a really long roadmap. I encourage everybody to read it, but that's my quick summary of it.
Yeah, no, there's seriously, there's a lot of stuff on this roadmap, guys. So if you haven't checked it out, please do yourself the favor and see where we're heading. Um, yeah, there's a lot of good stuff fleshing out towards turning feeder finance into an all-in-one DeFi platform, which, that's not what we originally set out to do. But, when we pivoted, what was it, 4 months ago, 3 months ago, and finally made
Yeah.
that decision, this is the result of that. So compared to where we were versus where we are now, it's definitely interesting to see. But I highly encourage you guys, definitely take a look at that roadmap, give us your feedback, let us know what you think. Um, so we briefly touched on it, but we have the Phantom launch on Friday. This is super exciting. We're finally taking the steps to reach out into another ecosystem. Do you want to give a little bit of color into how rewards are going to come back from Phantom back over to Feeder?
Yeah, that's a good question, because a lot of our members are asking about how the token will work and how the fees will work. And at the moment, where just to be clear, there will not be a new token. It will probably most likely be bridging our token over. So, that 100 million net supply, that will stay.
Yep.
Um, but we just need to make sure the security of things are sorted. And by security, what I mean is that, when you have a bridge, you're basically locking up the token on one side and issue the synthetic of that on the other side.
Mm-hmm.
If you deposit 100 feet on BSC on FTM, that bridge would issue, new feet on FTM that represents that 100 feet. And the risk with that is that if, let's say we have 10% or 20% of our supply getting locked in that bridge, getting crossed over to FTM, and an exploit happen, someone could pull out that 20% locked on PSC side and dump it into our liquidity pool. That's the effect of an exploit, and we want to make sure we're, not risking that. Um, so for now, we will see how we want to do that. We are also reviewing Chainlinks, what they're doing with that, because they're developing their own decentralized bridge as well.
Mm-hmm.
And for now, in terms of fees, what we'll do is that we'll accumulate fees in USDC over on FTM, and then move it over to BSC, bridge it over to BSC, and buy back and distribute on the staking pool as we do. So that's the current status of that.
Beautiful. Um, it looks like we've also launched 8 vaults this week with ACS through Atlantis Loans. Do you know anything about Atlantis Loans?
Yeah, it's actually really exciting, because they just recently launched, and they already have roughly 800 million in TVL. And what
Oh
they
my
do is
god.
they're just, yeah, pretty amazing. But the reason, I guess this is, um and I'm not sure how they did that, honestly, because I I I don't see a prominent backer. But what I know is that, A Crypto has doxed them
Yep.
privately. They're confident in the technology. We've looked into their contracts and everything's safe and sound.
Mm-hmm.
So there's and especially because there is 800 million, if there's anything uh, in terms of security wise that's not up to standard, then something would have happened by now, because it's a pretty basic, lending and borrowing. These are basic contracts at this point,
Right.
and everybody knows what to look for. Um, and we launched, our vaults going through ACS to those vaults, to Atlantic's lending protocol. The rewards are really high, and they're higher before they are now, and that's because of their token value coming down. So um, with all these products, just understand that the APYs are largely driven by rewards getting, for people providing liquidity, but also how the utilization rates are there. But predominantly for Atlantis, it's not the utilization rates; it's more about at this point about the rewards, and how many people are there to share it with us.
Right.
So it's likely to come down, but it's getting relatively stable at this point, and it's stabilizing at a high rate. So it's still pretty interesting product to look at if you're interested in all these tokens.
While we're on the topic of Atlantis, it seems we're also having Planet Finance and SpiritSwap enter the fray soon. Um, would you want to provide a bit of color about those two?
Yeah, and before Planet Finance, we have BuySwap as well. That's actually already done. The vaults. These will be auto farming vaults that will be going directly to BuySwap. We're not going through ACS in this case.
Oh, okay.
So we'll have, our auto farming vaults going straight to BuySwap, doing their farms, and this is sort of the beginning of our taking the community's recommendation and suggestions, because BuySwap has been recommended for a while. Vin is a big fan of that project, and so that's coming first.
Mm-hmm.
And we think it's coming out relatively soon after the FTM launch. At the moment, we can't change much because the dev build that's ready to be, pushed into production is waiting for FTM.
Mm-hmm.
So not a lot can change before that. And once that's pushed out, then BuySwap will come. And after BuySwap, then for Binance, we have Planet Finance, which is also a suggestion coming after that. Rafael is already working on the APIs. And for FTM, we'll launch with Spooky Swap first, and we have the API for SpiritSwap already completed, and the vaults will come for FTM at SpiritSwap relatively soon as well. So a lot of new products coming out in quite a short time.
Yeah, seriously, there's a lot of good stuff coming out here. Big kudos to being able to keep up with all that. So it
Yeah.
looks like there's been a lot of other back-end stuff going on as well. Can you briefly touch on the node optimization? This should solve our portfolio issues that users are experiencing, correct?
Well, it wouldn't solve the problem, because it would reduce the problem and speed up the site, so to speak. Because um, and I'll break that up I'll break it up in pieces. Number one is the nodes that we used before. We were going through I think three or four nodes. When one node went slower, we shift over to the other one and stuff like that, where there's a lot of things going on in the background.
Mm-hmm.
And but all of them have some speed and uptime limitations, because they're maintained. They're not top-notch, enterprise grade nodes that we're using.
Mm-hmm.
With this upgrade going into the enterprise level sort of node, what we'll have is we'll have dedicated, support, which allows us to react to things quicker.
Mm-hmm.
Um, the speed at which our requests are getting processed, and the amount of process per minute, stuff like that, or requests per minute, will go up. And so in general, what you'll experience is a faster load time for the numbers to show up. So that's the result of that. As for the portfolio page, that will load a lot faster as well.
Hmm.
There's only one caveat, which is assuming the node is live or it isn't experiencing any issues.
Right.
The typical 9 out of 10 times or 9.9 out of 10 times that the portfolio doesn't load is because there's some issue with the node itself. And the reason the portfolio doesn't show is because um, essentially what the portfolio does is it's pulling real-time blockchain data of your portfolio, right? So it's pulling what your balance is, which tokens you have in your wallet, and stuff like that. And so if the nodes are not working, we can't pull data from blockchains
Right.
or from the blockchain, and there's nothing to show. And that's why a portfolio wouldn't load up. And I think our sort of what we could have done better for the portfolio is to allow it to load up, but the numbers are not showing just because there aren't any numbers to show. Instead of just making it load at 0% forever, that doesn't give a lot of confidence.
Right.
Um, Even though it's not our fault, it still doesn't look good. And we have already with our FTM launch the new production that's going to be pushed up. Will allow the portfolio to show up whether or not the node is working fine. It's just that even if it's up, if the nodes are not working, you won't see the numbers. But that's, we can't do anything about that. But at the very least, we can give you some comfort that the portfolio page isn't broken by itself. It's more the numbers are broken. So that's an update for that part.
Will there be a page? I'm sorry. Will there be a page available to view the status of the node? Either to view requests or uptime or consensus messages, whatever. Will there be a page to be able to view any of that data?
Haven't discussed that, but there are sites actually, and when the nodes were going haywire last week, there are sites that people share to see how the failures, the node failures. So it's technically it's public.
Mm-hmm.
Usually, it's when it fails, they all sort of fail
Right.
because it's a systematic kind of situation where too much request is going through and the nodes can't handle all of the requests, or some delays, or when there's a backlog that's going through the nodes, and that that piles up, it could create some issues at these nodes, and then you have failures. So um, we haven't discussed showing that on the platform. I don't think we have to, but people needed to know that they have that information available.
Hmm. Very nice. So it looks like some other things that you guys have been working on as well. Pandit's been working on some product scoring. Have these upgrades finally pushed through yet, or will these be coming with the next development update?
No, not yet. So the product scoring, that's almost done. The last piece is actually getting uh, basically your wallet will become accounts,
Mm-hmm.
because when you review or you comment or you reply, we don't want to show your wallet just to keep your privacy.
Right.
You'll have accounts instead. So that's what we're working on, um, which is almost there. Probably coming out, maybe a week or two after the FCM, or so, maybe a week or two, since we're launching in 2 days. Um, and just the final thing on the development side, the portfolio is in process. Rafael's working on that, and he's working really hard because he's also doing all the APIs for all these wallets we're launching. So, but we're confident we can get that done in time for November.
And one last thing that I want to touch on real quick. Tomorrow, we'll be releasing a new snapshot vote on using withdrawal fees from the liquidity pool, or from the farm, to create a project treasury-owned multi-sig wallet. Can you briefly give some color to our users at home as to what this proposition, might mean? Obviously, they'll be able to see it, but, just before it's launched.
Yeah, and my guess is perhaps the audio will come out maybe a couple hours before the proposal come out. We want to time proposal with the three time zones, so probably early morning US, where Asia is still almost asleep and Europe is in their middle of their day.
Mm-hmm.
And so what we're proposing, and we touch on this as well in the roadmap, is that um, at the moment, the 5% withdrawal fees are going to the buybacks and then distributed to our staking pool.
Mm-hmm.
And that's all good and fine. What we're proposing, though, is that instead of distributing all that 5%, what we're proposing is that they're being allocated or they're being kept in a multi-sig wallet that's owned by the treasury instead. And the mechanics of things is that at the moment, the withdrawal fees are before they're turned into feed and getting distributed, they're LPs, right? Because when you withdraw from the farm, we deduct 5% of your LPs. And so all we have to do is, instead of breaking it up, we'll just move the LPs that are getting, withdrawn the 5% into a multi-sig wallet that's owned by the treasury. And the reason we're proposing this is really there are a couple of good points, and there's also a solution to a potential headache in the future. Our emissions have roughly 30 weeks to go, and by that point, the entire project will basically survive on its fees, right? And at the moment, the fees that are generated are sufficient to survive. The risk though is that if we are not incentivizing the farm well enough, that the farmers will essentially leave and create a thinner basically liquidity pool for us. And that is a risk for investors, because then there's more impact and more slippage
Yep.
when they're swapping, or if they want to sell or if they want to buy. It's a problem. So
Mm-hmm.
and we like having a larger liquidity pool. And so what we're based on our calculation, we should probably have, assuming the fee price doesn't change at all, we'll probably have roughly $480,000 in LPs locked, if we were to, assume that there's the same amount of withdrawals are happening per week until the end of the emissions. Assuming, though, that if the price of wheat goes back to its, roughly all-time high of 55 or so cents, that liquidity is about $1 million. $1 million in liquidity is half of what a project like Beefy has in their liquidity pool. So $1 million is more than enough to support the project and support the swapping.
Mm-hmm.
And what this means is that this liquidity is owned by by the treasury, or basically owned by the project and its holders. And whatever happens, it'll be there when and if we need it. So that's number one, right? And were you about to ask a question?
Yeah, so what will happen to the weekly buybacks for stakers? That will be gone, correct? And so single token feed stakers will then only collect 30% of the emissions going forward, correct?
Correct. So that doesn't change. The 70 and 30%, that doesn't change until emissions end.
Yep.
So the farmers will still be rewarded, the stakers will still be rewarded. The extra reward that's coming from the buybacks, that's going to be replaced with, or not replaced, but will be shifted over to going straight into the multi-sig instead. So no extra reward and no buybacks. That's coming from the withdrawal fees.
Gotcha. So there's pros and there's cons with this.
Correct.
Perfect. Yeah, no, yeah, I just wanted to get that out there so everybody knows what's at stake here. No pun intended.
Yeah. Good one.
But yeah,
Yeah.
you got anything else there, Pat?
Yeah. Yeah, and I think I want to also touch on and one of the, having liquidity that's there ready is one positive side, right?
Mm-hmm.
The other positive side, really, for us as a project is that that liquidity is ours to be used, for a community to be used to enhance the project in any way possible. So what will could potentially end up happening is that we could use this liquidity for um, our lending product, for instance, to have something like a lender of last resort,
Mm-hmm.
because the typical problem with lending protocols is that you need one party to have the other party,
Mm-hmm.
and if you can't get one up and running, you don't have the other, and the project doesn't go as planned. And so by having this liquidity, which is capital that can be utilized, we can therefore have a lender of last resort that then would allow borrowers to come in for borrowing. And obviously, if we were to do that, the collateral would be feed, and that would then also give another use case for feed, because then you can collateralize feed to, let's say, borrow these LPs and break it up into USDT or whatever you need, and provide that liquidity back and give that liquidity back to us, and nothing has changed. The only thing that changes, we have, number one, made APY from lending the money, and number two is that the project has made fees from that activity. So it's when you think about it, the having capital that's owned by the project has a lot of use cases for it, that's long term and sustainable for the project. So it's a it's an interesting concept, and if you really want to dig deep into this concept, you just Google DeFi 2.0, because it's the new wave of how DeFi is going. Instead of renting liquidity, you're buying or you're owning liquidity, and it's really insightful if you want to go deeper.
Yeah, no. What was the project you were talking to me earlier about? Olympus DAO. They've done a lot in DeFi 2.0. So if you guys are looking for more info on that, be sure to Google DeFi 2.0. Check out Olympus DAO. Um, any other projects you would recommend that have implemented these?
No, I think the best source is Olympus DAO, because they pioneered DeFi 2.0.
Mm-hmm.
And they've made a tremendous success with that, and a lot of documentations and articles about them that explains DeFi 2.0. And if you understand DeFi 2.0, you'll see why this is a really, really good idea for us, and hopefully you'll support this proposal.
Yeah, absolutely. I think the last resort market maker schema you talked about is certainly a lot more advantageous for our platform compared to the little buyback rewards that are coming through each week. Obviously, those will grow over time, assuming we kept with buyback rewards, but I definitely think with where we're going and where we're heading, that's definitely the best solution. But we are interested to know what the community thinks, and that snapshot vote should be up shortly after this video goes up. So be sure to check it out. Be sure to vote, guys. We want to hear from you guys. We can't build any of this stuff without hearing what you guys want. So, yeah. Is there any last thoughts you have for our users at home before we let them go?
No, I think we've taken enough of their time, and thank you very much.
Yeah, absolutely. So, thank you guys for checking us out. Be sure to catch up with us on, is it Sunday that we're doing the thing there?
It's Saturday.
Saturday.
Oh,
Okay.
oh, you mean the Spaces one?
Oh yeah. Yeah, we haven't even mentioned that.
Oh yeah. That's Sunday. Yeah, well, let's schedule that, and yeah, will be fun.
Perfect. So yeah, Sunday. Be sure to check out Twitter. Patrick and I are going to be hosting a Twitter Spaces there. This will be after the FTM launch, and we're hoping to hear any and all questions you guys have and be able to answer them. So be sure to tune in, check out, drop in, and I'll definitely be recording it and uploading it as well to YouTube. So even if you can't, we should still be able to view it on our YouTube channel. So that's all we have for you this week, folks. Be sure to write to us in our Telegrams and our Discords. Drop us some DMs. We'd love to hear from you guys. We'd love to get your thoughts. But yeah, that's it. So thank you guys for tuning in, and we'll catch up with you guys on Sunday. Bye-bye.